Okay, the first set of documents that came from the Series LLC funder, which was the hedge fund, was a recurring credit card and ACH direct debit authorization document. It's a two-page document that basically um, certified that the borrower must agree that if any payments fail, okay, first of all payments had to be done through an ACH. Okay, we had to provide the bank account information on this form, and we also had to certify that if any of these payments failed, that they had the authorization, they meaning the hedge fund had the authorization to charge the credit card for any amount that was not authorized through the ACH payment. So we had to provide a credit card as well as the banking account information. I don't know if that would have stopped the deal, but having this information presented for the first time on closing day was really it was sort of a slap in the face, and we didn't appreciate it. So that's why I'm giving this information to you now, so that you can prepare yourself accordingly. Okay, hard money loan document number two. This was the certificate of borrower and guarantor document. It was a four-page document that the LLC or the borrower of the loan had to present to the lender. Okay, it was a document that certifies that the loan is guaranteed by the managing member of the LLC. So the managing member of the LLC is the shareholder that holds the most shares in an LLC. So what this document basically guaranteed is that that managing member of the LLC had the financial capacity to pay for or repay the loan, regardless of if this um, real estate project was successful. So that was the first part of that document. Okay, and I'm going to read through the second part of the certificate of borrower and guarantor document just so you will know the details behind what was required. Okay, this document requires the borrower to certify the following things: that there's no material change in financial condition of the managing member since application. Okay, there's no material change in LLC operations, meaning there's no new members. The direction of the project hasn't changed, and everything that was in the operating agreement is consistent to at this time of the closing. Also, the borrower will be the owner of the property. Also, the borrower has no known pending legal proceedings, liens, bankruptcies, judgments against anything concerning the LLC or the project that would adversely affect the lender or the lender's liability. Also, all agreements and documents have been provided and accomplished. There's a lot of documents, so they needed to verify that all of those documents had been accomplished and provided. No member of the LLC has furnished any repairs, labor, services, or material on the property within the last 90 days. Now, they were very particular about that. They didn't want any pre conditions or any liability for any work that may have been done or any unpaid labor prior to the application. So there were several places where we had to verify that in the agreement. Also, the buyer would acquire flood insurance, and no person in the LLC will reside in the premises. The loan was for commercial purposes only, and a lot of that had to do with the if the payments were defaulted or there were any events of default that they could seize and take the property without having to go through the courts for eviction. And we'll talk about defaults later on.